Good afternoon and welcome to week 16 of the True Normal. My name is Roelf vanderMerwe and I'm a director at vanderMerwe Robertson Attorneys. A special word of welcome to my three colleagues, George, Eugene and Christelle. Then to Theo Vorster, CEO of Galileo Capital. Theo needs no further introduction and will again today assist with facilitating our conversation with the guest speaker. Our guest speaker today is Rico, Basson, Executive Director of VINPRO. Then Matthew Dundas, CEO of Dundas Property Group, has the privilege to conclude and end our session today. As you know, our session is interactive and you'll be given the opportunity to ask questions to both speakers. We just ask that you state your name and the business you represent when asking a question. The answer to our intydse vraag for this week, thus, what is the current talk of the town? It is surely the ban on alcohol. 1, 2, the Cape High Court decision in a ruling where God Risk must pay out the business interruption insurance claim by local restaurant Cafe Chameleon. My fellow colleague Eugene Groenewald, an insurance expert, and Theo will in depth discuss the judgment and the subsequent appeal filed by God Risk in our session next week. On the ban of alcohol, we have managed to pull Rico Basson away from a very, very busy program. An interesting challenge that are facing not only VINPRO, but its members and the wine industry. Let me introduce Rico Basson. Currently, the Executive Director of VINPRO since 2012. Prior to this, he was involved in the commercial banking industry with specific focus on the agricultural industry, including wine. He has been instrumental over the past 8 years to not only refocus the VINPRO group and associated businesses with the wine industry value chain, but also initiated a comprehensive strategic framework for the SA wine and brandy industry with 10 key projects and targets towards 2025. Linked with this framework has been a sound advocacy role with key national and provincial government departments and international stakeholders, as well as close collaboration with labor, including trade unions and civil society. No doubt that this sound advocacy with national and provincial government will come in handy now, Rico. He has also served on various industry boards as both director and or chairperson, and also plays a vital role in his community. Rico, all our businesses are currently experiencing the COVID turbulence, but the wine industry are now in a more serious storm. We are looking forward to your views on this, and the platform is yours. We listen to you.
Roelf, thank you very much for that introduction. In my early life, I was just an economist, so it was easier not to have all the advocacy burden as well. And also to Theo, thank you for the invitation. Yeah, I thought I'll share a few thoughts by way of a presentation, but I think it's almost easier if we could take questions later on. So I hope I don't bore you with too many slides in terms of where we are. And I think the focus for me is more, so what now? So I'm going to touch on a little bit of context of the industry, the ban up till date, and then just some thoughts on next steps with your permission. So if it's in order with you, I'll take questions when I'm done, and hopefully I'll only spend about 20 minutes on this. So leading up to the shock announcement of 12 July, that was Sunday evening, I think it was about 8:20, we've seen in the media a lot of anti-alcohol, anti-tobacco sentiment coming through, and as we sit here, the wine industry and alcohol has had its stop-start approach, whilst tobacco is still not back on the playing field. And I thought it's prudent to start with Winston Churchill, who really said, well, if you destroy a free market, you create a black market. And if you make 10,000 regulations, you destroy all respect of the law. And this morning, I also watched some of the riots in other countries where the public is not in agreement with some of the decisions being made. But I do think, to the quote, what we do have in South Africa prior to the ban is a huge illicit sector. And if you think about it, that 1 in every 4 liters is illicit traded alcohol in South Africa. By now, it would be north of 30 to 40%. So it is vast, and it's not necessarily policed. And therefore, one needs to think careful about a ban and the results with that. We also heard our president on various of his speeches talking about the impact of alcohol, the impact on trauma, also gender-based violence, and also a call to a new order, a new social compact that goes with that. And as industry, over the last 2 months, we've really worked very closely with government to try and resolve a number of these hurdles with targeted interventions. And now, in essence of time, I'm not going to spend too much on everybody, but there are very specific interventions to resolve gender-based violence, to resolve drinking and driving, drinking and walking, curb illicit trade, find a balance on safety. And the industry has invested vast sums of money and product, making hand sanitizers, equipping 35,000 tavernists, and the list goes on. So there has really been an outreach and a step change from industry. So we're a bit shocked, to say the least, on Sunday evening when we got out of nowhere. We were taken back 2 months without any consultation, without any heads up. And I think most people on the call that are involved in the industry would say, why? And the most questions I get is, well, how long? And I don't have that answer. A personal opinion might be that how long can be 8 to 10 weeks, but it could be longer. For the wine sector, another 10 weeks will be disastrous. And I think I'll just talk to that. So from my side, I just thought perhaps not everybody is fully informed about this industry. When we talk about wine, we talk about a value chain. And right at the bottom, we employ a vast number of people in wine, beyond the farm gate, and also in tourism. And it's a significant contributor to the fiscus, 49 billion rand, of which 7.5 is taxation. And then as you go from left to right, you see the numbers on production. There are about 40,000 workers on farms, the wineries, a bit of a Pareto principle, a number of 80% very small, a concentration of buyers, and then when you go to exports, perhaps not that well known, but wine is the second largest export product, just below citrus. So it's significant for the Western Cape, it's significant for national. Is it that profitable? Unlike popular belief, no, having a wine business isn't profitable for everybody. And to the right, you can see the pizza slide that about 1/3 of wine businesses are sustainable and profitable. About 40% are more marginal, and 1/3 are loss-making. And therefore, you find a big fallout of producers every year. Now, it's not unique to wine. It's probably in line with consolidation all over the world. But just to can the perception, if there was such a one, that wine is highly profitable for everybody. So So I asked an executive end of last year, we talk about sustainability, if you need to give me one word to describe that, what would it be? And he said, well, it's easy, Rico, it's cash flow. And little did I know, coming into this year, what would hit us in February, March, to where we are. And cash flow is perhaps the one word next to uncertainty. That is the challenge. But the challenges we face as wine didn't start with COVID. It actually started end of last year, and I'm sure Theo speak to this often, globalization. In January, we thought, how bad will it get? And then we started thinking, oh, how do we get out of this? And I think that's very typical for where we are as an industry as well. But the last 120 days, the last 15 weeks, actually, for us has been a stop-start approach. We started on the 23rd of March. It feels like long ago when lockdown was announced, and suddenly wine was not essential, although it's agriculture, and we couldn't complete the harvest. So we scrambled, and 3 days later, on lockdown, we managed to get permission to complete the harvest and to store the wine of 2020. Then it took us a while to ensure that we could export on the 7th of April. But Minister of Transport decided on the 16th that we couldn't transport wine to the harbour, which made exports null and void. You had containers in the harbour, but you couldn't get it there. And then I think the big breakthrough was on the 1st of May, we were allowed to export wine. We were allowed to package it, we were allowed to manufacture it, and for an industry that exports 50% of product, this was a big breakthrough, but with not out significant losses, directly about R1 billion, and obviously in reputation, also quite a bit. And then we started export and just realized that the port and shipping lines are very disrupted, and the Cape Town harbour posed a massive problem, operating at 40%, 50% with big backlogs. So, and a month later, on the 1st of June, we were allowed to do local sales, as you know by now, limited hours, Monday to Thursday, 9 to 5. All channels, including restaurants, could sell wine, wineries, e-commerce, and life got a bit better. And then obviously, Sunday evening, the 12th, the domestic part was taken away. We can still export, which is appreciated, but yeah, we need to unpack this a little bit better, I suppose. So just in terms of production, sales, and stock, and I'm just going to glance through this. I think it's important when we talk about wine. So when we talk alcohol, which is a word often used in the media, we need to realize that wine as a category versus beer versus spirits and others is only 9% of all the volume sold. It's 345 million litre. And the question is wine lifestyle or is wine alcohol? And it's quite a debate, and I think there might be questions on this. So most of us would think about wine as a bottle, and indeed we sell 150 million litre in glass. But we also sell a lot of wine in box, 132 million litres in 3 litres, 5 litre bag in a box. We sell wine in other packaging formats, Petra, foil, and others. And then we obviously sell a lot of wonderful MCC. So is it a lifestyle? Is it alcohol? You actually have two industries in one. You've got private estates doing premium, and then you have massive factories with great producers supplying what I would call more generic product that goes out in bulk wine, or it goes into. It's 20 years. The dip that you see in 2018 and 19 is the drought, which posed a huge crisis for us. We were glad that the 2020 harvest was slightly bigger. But then with COVID coming, one of our biggest markets, Europe, was shut in terms of the on-trade. This is largely referred to as the restaurant sector. And a massive part of wine sales in Europe is done within those channels. And suddenly, a lot of that wine globally couldn't go there and it was pushed back, which created a global oversupply. Now, as I speak today, most of those channels and the map you see, except Russia at the top right, is back open. But the recovery is long and slow. A lot of value was lost. Then, more important, part of globalization, the orange graph is the total sales of the industry. And you can see that it's been coming down domestically as well as internationally due to a number of factors. But the end result of this is, and I know Churchill said that if you look at a graph, you need to say something where it intersects. And I think what I want to say about this is, before we had this announcement on Sunday, we knew already that due to lack of trade, we will sit with far more stock than we want to. And I think it's fair to say that there will be a significant surplus of wine, which will put a lot of pressure on price in terms of market, and it needs specific interventions to make sure that this situation is eased back. Demand by itself is not going to resolve it. I don't think we will make up what we've lost over the last few weeks. I'll just quickly glance through this. So we do think that the prices for farmers and the prices at winery level will come down by 30%, which is not good news if you think about the profitability, but it might be more. And it will definitely be more if we think about this lockdown and what it will mean if wine can't trade for another 6, 8, 10 weeks. It will be disastrous. So it's fair to say that when we talk jobs, and I've showed you the picture, that there is a huge challenge, and this is an industry in a disaster. At the bottom of the slide, 18,000 jobs. I think it's fair to say that those jobs will be lost. A lot of them is on-farm, a lot of them tourism. 60 to 80 wineries of the 530 might close. And I think a lot of producers will not be able to sustain this when prices come down. And I think it's a pity that we are losing jobs because the export ban initially, I would still argue, was uncalled for. And I think there could have been prevention around this. But I think more important, the second half of the presentation is so what, and what now? And it seems that the future is not what it used to be. And to the right hand, I think very important to the decision that was reached on Sunday evening are the spikes when you look at Gauteng in terms of infection, but specifically the Eastern Cape as well, whilst the Western Cape has plateaued. And I think those two provinces were very, very prominent in the final decision because they ran out of capacity in terms of beds. And are already in a bad place in terms of planning. So there is no single solution. I think you need 3 action plans as a business. I think immediately stop bleeding. I think most of the wineries has done that. Try and stabilize it. I think we just got back to that, but now after Sunday it's difficult, and then you need to return to growth, which suddenly is pushed out. So what I want to share, and I will share the slideshow afterwards with you because I think it's a longer conversation, is are the decisions that were taken rational? Were they just based on crisis? And what happened to the much talked about risk-adjusted approach where we had different levels provincially and on district? Because the last part seemingly has gone out the window. And just to share a few thoughts with you, unlike popular belief in terms of newspaper headlines, there's also acknowledgement that the alcohol ban wasn't the only thing that assisted lower hospital trauma. It was also a case that there were just less traffic, and the next 2 slides prove it. That if we look at this is a Google graph which showed you when we went into lockdown on the left, the mobility dropped off significantly. Even in Johannesburg on the right, it dropped off significantly. So So it's true to say that the statistics are very important on terms of the data, on the evidence that decisions are made on. If we look at England, very much the same. When you had a drop-off in traffic, your emergency emissions at hospitals also came down. So there seemed to be a correlation, and alcohol by itself cannot be blamed. Did banning alcohol made a difference on COVID infections? If you look at the statistics, the answer is no. Even prior to the lockdown, the infection rate kept on creeping up. So it's safe to say that the ban itself didn't help to have a massive impact. And I think we've seen with Gauteng now some linear changes in terms of the curve. What would have been alternatives? And these aren't mine. This is Charles Perry, who presented yesterday to the committee. Before you go blanket slate, what were the alternatives? And once again, we could have limited availability. We could have had a different tolerance on drinking and driving in the middle of the slide. We could have rethinked advertising. We could have rethinked the risk-adjusted approach. Why not take Gauteng back to level 4 and the other provinces go to 3? And this is not me talking. This is an anti-alcohol lobbyist researcher, Prof. Perry, presented this. So I think that's the uncertainty and the frustrations, that there are other options to get a better result than where we are. If you look at our wineries, a number of them are very small. And I want to share with you, it's a very busy slide. A lot of them are also micro and SME, which means their turnover are below 10 million rand. And if you look in the middle, what is very important for them is direct sales, direct to consumer sales. This would mean a cellar door sale. It would mean the tourism sector. And you can see the really small ones, 26% of their sales is linked to tourism. And with tourism not at the moment anyway, restaurants are closed. These small companies are really struggling with income. And they're not that big in the so-called retail channel. This is also relevant when we talk risk. E-commerce, I would think, is something that should still be allowed, much as I think that winery sales should still be allowed, but that we can handle in the questions. So Roelf, I'm going to end off, and then I'll take questions. So in Afrikaans, we call this a natrosie. This is the end of the harvest. And the Chinese say a crisis has got two elements. There's danger, which all of us feel at the moment, and frustration, and there is opportunity. But at the moment, I think we are there where we are pursuing a partnership and a new social contract with government, which I've shared earlier, which is a new partnership on a new alcohol framework and big commitment from industry. Frustrating process, government is not coming to the party as we want them to. And then on the other hand, let's get more radical, let's look at class action, let's look at litigation, and let's stop being diplomatic. And yeah, with that, I'll stop sharing and perhaps I can take a couple of questions.
Rico, can I start? Thank you. First of all, thank you very much. I've come to know over the years that you are not only very knowledgeable, but you're a very skilled presenter. Thank you very much. I think it was a quality presentation, lots of detail in, and you got to the point, very structured and logical. But I want to ask you, start off with a question pertaining to, you talked about the fact that the industry is actually two industries. On the one hand, we've got the let's say the bigger estate, the branded, those that we know, those that we're willing to pay a premium for, the wine farms that we like to visit, and the wines that we will have on special occasions. And then on the other side, there's the big portion that is cooperatives, that's got massive amount of farmers, of grape farmers producing, supplying into that. Usually that is not that well known in terms of the trademark. It's more on the bulk side. Sometimes it's great wines. Also, so I don't want to make, this is not a discussion about quality. This is a discussion about how these two segments are first of all affected by it, and what's the options for first of all the estate winery, and secondly then for the cooperative side, volume-based winery?
Yeah, I think Theo, thanks. It's a good question. There's generic, these factories you talk about produce about 75% of all the wine, and the private estates 20 or 25, although their value is higher. I think the bad thing for the economy is that when we opened exports, most of people started exporting bulk wine, which meant less bottling plants, less just to get the wine out because domestic was closed down. It really differs. If you have a brand and you had the announcement of Sunday evening and you're very exposed to the local market, it doesn't matter if you are well known or not. You are grinding to a halt, and it then really matters on do you have the liquidity to get ahead. I think for the grape growers, a lot of pain is coming because we find that a lot of margin is just pushed back to the farm gate. And I think that's a pity because the casualties, firstly, is some of the smaller players. A lot of our transformation projects, which we've worked on, for example, will be casualties of this. And what I'm seeking at the moment, apart from opening up channels, is assistance. And it's dispensation on excise taxation. It is dispensation to see how we could get some of the wine in stock distilled into spirits, for example. So a lot of solutions we are currently driving. So there's no right answer that the private estates are better off than the others. It really depends on the channel and on the product mix.
Before I open for questions, just another question to put this into perspective and to get your idea on it. And this is more for perspective. If I take a bottle of wine, let's say for 100 Rand, the bottle of wine, what of that 100 Rand ends up in the fiscus as is? And I'm not too concerned. This question here specifically relates to the whole or the lack of income on the fiscus side. Let's say 100 Rand bottle of wine. What roughly ends in the fiscus if you go through the value chain?
Yeah, look, I often use the example of a slightly cheaper bottle, a 40 Rand bottle. That would be about 8 Rand 59 Rand, if I have my numbers correct. So 8 Rand goes to the fiscus, probably 1 Rand 50 will go to the farmer. So you've got this very skew arrangement on that. The industry pays, as I said, 7.5 billion in terms of excise tax and VAT. And at this rate, we will lose a third of that. So government will lose 2.5 billion, which, as I say, could have been prevented, firstly, and secondly, we could have stabilized the sector if we followed a balanced approach. So I hope it answers your question. When the restaurants were still open, we said that the waiter got a bigger tip than the farmer.
Well, yeah, thank you very much. I'm going to open for questions. Just a comment then. So if I look at the screw tops, it seems that we're still on the dop stelsel, that the amount that the farmer gets, you can actually put it in the doppie of the bottle of wine, and the balance goes to everybody else. But Roelf, you have a number of questions that we have at this point in time. Would you like to ask some of them to Rico?
Yeah, Rico, let's maybe open the floor first. Is there anyone from the floor that wants to ask a question?
I've got a question, Roelf, if you can hear me okay. Matthew Dundas.
Yes, Matthew, we can.
Rico, thanks for that. Just wanted to ask, you showed the graph between 2015 and 2019 and the profitability, and it showed a move into greater profitability for a number of farms. Is that increase in farmers, new brands coming in, price points? What is the reason for that increase in profitability over those 4 years?
Matthew, thank you. A great question. What we've done, and I think the drought assisted us, is we managed to increase the price point international for wine in foreign currency, but also locally. And I think it was much needed and overdue to get that up. And with that, obviously, a better volume coming through. So the combination of that and more effective practices on cost assisted with that. So that's the short answer on that. Obviously now we think a lot of that gain that we had for 3 years would be lost, which is a pity.
Sure. Would you expect to see a continuation of that greater increase in pricing going forward? Do you think that enough momentum's been built up there?
No, well, that's what I showed you. I actually think that with huge pressure on oversupply, that strong build that we've had, and I don't want to say we're going to dump wine, but I mean we will have to clear stock. So we might go back to where we were in 2016, unfortunately, which is rather frustrating because we are, in world terms, are small. We are only 2% of the world, but we do think the more important 2%, and we work hard on price points.
Thank you, Rico.
Any other questions? Rico, some of the questions we received, as you rightly mentioned, the margins are pushed back all the way to the gates of the farmers. At what stage will the farmers consider planting alternative crops?
Roelf, that's already happened, and I often say in agriculture differentiation has become a bit of a swear word, but I actually think it's a good thing. So a lot of the wine farmers diversified into citrus, for example. It's a better utilization of labor force as well, the cost and the potential of good soil and good water will always go to a more profitable sector, I suppose. So I do foresee that we will have a smaller industry. It will consolidate. But I think differentiation is not a bad thing. We need to utilize and be more effective and probably see larger scale and more technology coming through.
A second question here, you've touched on it, let's call it the balance between alcohol and lifestyle. At what, I mean, this is the second ban now for alcohol. At what stage will someone like a VINPRO consider it wise and prudent maybe to unbundle them from the bigger alcohol industry and specifically present their respective members per se?
Well, I think, Roelf, we have done that. I mean, our members are the wine industry. So firstly, wine is an agricultural product. And in terms of legislation, that is a very important department for us. In terms of trade, Department of Trade and Industry is important. But it is alcohol ultimately at 12 to 14%. And whilst we might argue lower risk and higher risk and channels of consumption, we also need to be able to quantify the risk around drinking and driving. And where wine might be involved or is involved in terms of violence, in terms of substance abuse. And I think, so it's not about differentiating the one or the other. I think as an industry, we need to be responsible. We need to rethink some of the things we do. And I think there are low-hanging fruit, pardon the pun, to find these solutions. Ultimately, it's about a broad sector. It's a sector with massive scale. It's a sector with huge employment opportunities. For every one person on a farm, another 10 are employed in the channel. So just to your point, and I mean, perhaps I've missed it at the end. So the question is, how long do we take to deliberate, and what about legal action? And we have, as I sit here in part of my day, we have seek legal counsel to look at the position because the industry cannot afford another 10 weeks. And we need to see how we could mitigate where we are and get into a better position And we do think certain channels are low risk, and to my point about infection rates and risk adjusted, I think that is the consideration with proper research.
Rico, thank you. This last question is more closer to our law firm. Does our firm have structured and advised on a few workers' trust structures? This is now for the farm workers over the past few years. Will VINPRO consider their support input in acting as a united front to try and resolve the alcohol challenge?
Roelf, yes, absolutely, and I'll add to that. Yeah, so obviously a lot of transformation projects across this chain. It's not only the sector, it's also the input suppliers, but also labor. So part of the discussions at the moment is shoulder to shoulder with my labor stakeholders, with the transformation projects. We need together. And I think all voices need to be heard. So yeah, short answer to your question.
Can I just perhaps ask a last question, Rico, since Roelf said that's his last question. As a wine connoisseur, not a connoisseur, a wine user, a wine drinker, somebody that enjoys a glass of wine, in this time and where we are now, what can we as a consumer, as a supporter of the industry, what can we do to assist the industry while we're in this lockdown phase? Is there any specific actions or transactions or activity that we can enter into to assist the industry that I think is an asset to South Africa and an asset to anybody that enjoys a nice meal with a glass of wine? What can we do?
Well, for one, Theo, you can order wine, hey, and pay for it. We can just deliver it later. So that's one thing. No, look, I think there is room for public sentiment. I do think the public should voice their opinion. It's a democracy, last I checked. And I think we need to work together around this. Question decisions if we feel they're not right. Help with research where we feel we can benchmark it better. And use our feet and our mouths, I suppose, around that. So I hope I answer you slightly. It's helpful if you order something. At least then a winery has got some cash flow with that. And be responsible. I think it's a crisis like this makes you look at yourself also, and you rethink what you do. And I think consumers as well. We should have zero tolerance for drinking and driving, irrespective of the limit. And things like that should include when someone purchases wine at a winery or have a tasting, let's test them, or let them test themselves. So broad answer, Theo, but that would be my sense.
Rico, I'm going to give one more chance for the floor. Is there any last question?
Roelf, it's Chris.
Hello,
from
Chris.
Display One.
We can hear you.
Just for Rico, I'm not sure if I missed it, but if I understood correctly, he was saying the more bulk producers, during the possibility where they could export, the more bulk producers were exporting, not necessarily over and above the boutique wineries, but exporting more than usual. The impact on that for the quality of wine that's now going out of the country and being received internationally. What is your take on the effect of that wine now being put out in the market more than, let's say, the more typical export wine or higher quality wine?
Chris, no, thanks for the question. Look, my first answer would be, look, we once again, shipping packaged or bulk shouldn't necessarily be differentiated against. We are a quality bulk wine producer, and we do it very effectively. So a lot of the bulk wine goes out, are bottled internationally, and it's on the shelf as South Africa. I think my risk would be that due to oversupply, we start discounting in the world and we compromise on quality. And I think that's your question. So I do think it's something that we need to watch and protect and make sure that in the short term, we don't do actions that will hurt us in the long term. So I hope that answers your question.
Yeah, that's helpful. Thank you.
No, Rico, thank you. The participants doesn't know, but Theo and myself only last night at around 10 o'clock convinced Rico to take on a bit more pressure, a bit more workload on his desk to prepare and present today. Rico, you've done very well. Very informative session, and your presentation was very well presented, and thank you for that. Theo, the floor is yours. Theo, can you hear me?
Yes, I can hear you. We've got a note here from Philip Retief that I'll just quickly read. If 15 million consumers, that's 25% of the population, consumes 1 glass additional per week, Theo, our surplus would be gone in 12 months. So there's a challenge to you. Please, at the end of the week, before you shut down or before you close for the weekend, have that 1 extra glass on the wine farmer. Thank you very much, Philip. Yes, so let me, as usual, I am just going to, Roelf, thank you. I'm going to talk a bit about the economy and a few comments on where we are currently. So let me just get the slide. First of all, let me just close that. I'm going to talk about just the JSE for a minute, then the Rand, and then a few general comments. This red line here is the JSE All Share Index. That is where we were in January, and we dropped. This is indexed to 100. The JSE All Share Index dropped more than 30% in March. And that was just there where the lockdown came in, first of all, and we were downgraded as junk. So one would assume that the JSE All Share Index would have been under pressure from there onwards. But the fall was in anticipation to this happening. From there onwards, the All Share Index is, as we speak now, less than 3% off what it was there. So the JSE All Share Index, after a massive drop, and it actually turned around on the day the announcements were made. In the week of the 27th of March, in that week, we reached the all-time low. In that week, on the 27th, was our first day in lockdown. And on the 27th, we were downgraded to junk status. But look at the JSE All Share Index, 3% off. That's not the whole story. The black is the industrial index. It dropped less, recovered, and is currently more than 10% above what it was in January. That's primarily driven by Naspers. So be careful. That creates a bit of an anomaly. The second index, the purple index there, that purple index is the JSE Resources Index. That's the big mining companies. Again, it actually dropped much more than the industrial index and much more than the normal, our JSE All Share Index. So it dropped handsomely, more than 40% at the low. But it's since recovered, and why is it now up about 7 or 8%? The reason simply is that as the world government starts to come into play in terms of commodities, a first go for any government is to spend additional infrastructure. And infrastructure spending means that there's usually a big demand for mining and other hard commodities. So that's why we see that up. This is the All Share Index. The two sectors that are lagging massively, number one is the financial sector. That's our big insurance companies and the banks. So the banks are still down more than 25% than they were. We know that there's two factors putting pressure on the bank shares. Number one, the Reserve Bank has asked them right early in the process to curtail or to rather to look after their balance sheets. Now that in normal terms means that they don't pay dividends. So you will see all the banking stocks are skipping their dividends and they're conserving cash. So if you buy a bank and you look at the dividends, they are not paying dividends currently, and that includes all the banks from the bigger bank to Capitec straight through. They are not paying dividends. Why? The Reserve Bank said, please conserve your balance sheet, so we're not seeing dividends coming from the banks. The second point is the insurance. The short-term insurers here are obviously taking strain as to where will they end in terms of their possible liability of business interruption. And as we said, as Roelf said, next week, if any of you is in a business where business interruption policy was an issue or is an issue, I'll talk to Eugene Groenewald from vanderMerwe Robertson, who's a specialist specifically in insurance law, and we'll talk about the case that was, what's going to happen and how it's going to play out. But that is the financial sector. And the other sector that's down, that's still massively down, and it's not recovering, and you can see it's down more than 40%, is the property sector, the REITs, the properties sector of the JSE. The property sector had a massive drop, a bit of a jump. These jumps are more or less linked to interest rates when prime got dropped, because it does assist their balance sheet, but they are still way down and they are underperforming. So what we are seeing is, although the JSE All-Share Index is barely 3-4% off its levels in the beginning of the year, we are seeing it's driven by commodities and by the industrials, but the financials and the property sector is still way behind. So if I then go to the next slide, this is the Rand-dollar exchange rate. Now, what I want to show you here, this is the physical exchange rate. That is the exchange rate, the Rand-dollar, and that's where we are now. And you can see every time here we had two major events that went against South Africa. We had the very surprising firing one night when President Zuma fired Finance Minister Nene and Deputy Finance Minister Jonas. And also, without any reason, we fired the Springbok coach at that point, Heineke Meyer. Both led to massive weaknesses, and then over time started to strengthen again. This, if you look at this year, was the financial crisis, or as the Chinese calls the American crisis. This was the emerging market crisis, specifically early in 2000. So every now and again, we have this blowout of the Rand. This blue line is the difference in inflation between South Africa and the US. So over time, the Rand will weaken in line with the inflation. And the question now and these are just one standard deviation just to create a band. But what you can see is, as long as the Reserve Bank maintains a policy of managing our inflation rate, number one, and number two, there is a functioning, and I say functioning because we have a deep and functioning capital markets in South Africa, the Rand from time to time will come back to these levels. Our view at this point is, when the Rand was at 1930, we said, no, you shouldn't take money offshore. Currently, with the Rand at about 1650, if you want to diversify internationally, I think it's a time to start this process, because I'm hesitant that we will see these levels again. We've got a lot more political uncertainty than here, and our state government finances is in a horrible mess. So that's just 2 points on the Rand. On the COVID effect, and I'd just like to show viewers this graph. This is the graph of excess deaths above the normal year. So let's go to South Africa. That is the normal year expectation deaths. That's in the winter we pick up, but we are now starting to see excess deaths. If you look at countries like the US, instead of normal deaths, they were at that point 45% higher per week. In total, about 65,500 people. If you look at that's the UK. If you look at the US, 149,000 people excess deaths there. Unfortunately, South Africa is where we were nicely. We're now in that area. Israel is not there. Iceland is not there. Norway is not there. But we are there. And this following graph actually shows it very clearly. And therefore, I think South Africans need to be extremely careful. This is the normal average deaths per week in South Africa of all causes. That's a normal line of deaths. This is the parameter statistical of where you can be. But you can see there clearly we're on this trajectory. And I think that is a wake-up call for South Africans. We need to be extremely careful. We are now in the area where there's real excess numbers, and that correlates with a number we see from the Financial Times. This is from the South African Medical Research Council, but you can see there, we are clearly getting up in this line, and we need to be extremely careful. And I think this is one of the major reasons why the government decided to clamp down again. So as from everybody's point of view, I think we need to be extremely careful. We need to watch what we do. And this is just an interesting, it's from America. It's from the Texas Medical Association. And it shows a risk rating of activities. The highest risk is going to a bar. The second highest, attending a religious service of 500 or more worshippers, going to a sports stadium, attending live music, going to the movie. But the low risk is getting a restaurant takeout, playing tennis, camping. Robert playing golf, that is a low risk activity there. Staying in a hotel for 2 nights, going to a doctor's waiting room. And I think we need to be very careful that these activities is fine, these activities is difficult. And given the trend we are, my message is, guys, we have to listen to the advice. We in Gauteng is now probably where the Western Cape was 2 or 3 weeks ago. But I do think as a country, we need to be extremely careful, and we need to heed the advice. Our trajectory is on the wrong side, and it's basically end up being what you do and how you do to get us through this. But that is a few economic elements. If anybody has a question specifically on the economic side and how I see it playing out, you're more than welcome to ask me a question. Any questions on this topic?
Yeah, I have a question for you.
Yes, Matthew.
At the beginning of this series of the end game, and there was a few other conversations around it, there was an opportunity identified with more manufacturing coming out of South Africa, taking it away from China, etc. Have you seen anything that is showing signs of that, especially with the weak rand? Maybe there's an opportunity.
I'm not seeing opportunities. What I am seeing is that companies that compete with international manufactured goods are starting to become more positive in terms of their market. So what you do find is the weak rand allows local manufacturers to compete more comfortably. And that I'm starting to see. And I'm seeing more and more confidence in local manufacturing. I have not seen, and so that we're seeing. And secondly, what I'm seeing, and this is now a very, very small sample, I just talked to some of the more localized retailers, a family-owned greengrocer or a family-owned butchery or a family-owned bakery. And all of a sudden, I'm starting to pick up that these guys are finding their feet again. I actually saw that one of our local family-owned greengrocer is doubling the size of his business. And when I asked him, why is that? He said, well, I have an opportunity to take the store next door space, which I never had. So I'm starting to see that, but not in the scale, and these things usually take time, but not in the scale that I think we're going to see. And I think what Rico showed correctly is we need to be very careful what is going to happen with globalization. And I still buy that point. I think if you just see how America, how the US and the UK is starting to react to Huawei, those are things that are not strictly technical based. There's political factors in. But I'm seeing only the start of it, and I'm seeing it where manufacturers are saying to me, it's easier to compete with imported product. But it's very, very early days, and it's very, very early in the process.
Thank you.
Any other questions? Yeah, I just want to end up then with if there's no other questions, just again, I think there's a lot of uncertainty and a lot of interest in where we are going with business interruption, what the role of the regulator is, what the role of the courts is going to be, and how that is going to play out. So I think if anybody has somebody that has an interest in his business insurance, or is either on the insurance agent, on the broker or the insurance side, or on the side of the of somebody that believes they have a claim or believe they know somebody that should have a claim. And we will discuss it with Eugene next week. So if you have any questions, you can mail Roelf or Eugene, and we will prepare those questions. But the key is, I think this is going to dominate or going to be a big item in the next 6 to 12 months. And I do think there's not only a legal question there is going to be the question from the regulator, and also the question from what society expects from an insurer. So I think this thing is going to be big, and I think there's merit on all the sides. So if you have any questions, mail us. We look forward to next week when we will unpack, first of all, what the court said in terms of the guard risk case, what the appeal is based on, and how specifically Eugene, how he interprets the law in this respect. And I will give a bit of a synopsis on what I'm getting from the insurance companies, which is slightly different from what the judge said and what the and what the newspaper reported on. But from my side, thank you very much, guys.
Yeah, Theo, thank you very much. Matthew Dundas, can I ask you to conclude and end our session?
Yeah, thank you, Roelf. Thank you, Theo, Roelf, for this platform again. Thank you for your insight, as always valuable. Rico, thank you for the work you're doing. As someone who enjoys wine and has recently been able to get a bit of insight into the industry, it's a fantastic industry, and you touched on the need for kind of diversification, new people coming into the up and coming, and we've seen that with CWG, obviously your efforts as well. And for that to be heard through this is a great tragedy and will do untold damage for many generations, sadly. But we thank you for your efforts, and we wish you best of luck, and maybe we should all keep each other accountable for the extra glass a week. I certainly will be doing it. So thank you, everyone.